please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
All right, they're crossing the T's and dotting the I's. Let's see if we close above it. Maybe, maybe not. We'll see. But a lot to come, and those IBM earnings on the second hour of the closing bell with Kelly Evans and Company. See you tomorrow, Kel.
Thank you, Bill, and welcome to the closing bell, everybody. I'm Kelly Evans. Let's see if we, after trading above 23,000 on the Dow today, could close above that level. It looks like we are just less than a point shy, but these things move around on the bell, so we will give it a moment before declaring it one way or the other. What we can say is that this close higher for the Dow is a record close, but it looks like 22,997 for the blue chips, and by far the outperformer in terms of the major averages today. Think on what it will take to keep that rally in the Dow going past the 23K mark. Joining me on the panel today, we have CNBC senior markets commentator Michael Santoli. Next to him is Sarah Hunt, who's portfolio manager in Alpine Funds, and Jeff DeGraff is also here. He is chairman of Renaissance Macro Research. Let's just begin with a few of today's major market moves. The Dow hitting 23,000 around 11 a.m. today before closing higher by about 40 points. By the way, call it this 1,000-point move. That's just 53 trading days, guys, after it closed above 22,000. Materials, the best performing sector since then. Telecom has been the worst performer, which has been the case pretty much all year. Today's big winner in the Dow was United Health Group with a big move, about a 6% move to the upside after earnings and some positive news on healthcare. And the biggest loser was Goldman Sachs, despite a big earnings beat, down about 2.5% today. Michael, what do you think?
Slow, measured progress has been the story of this market this year. So that 1,000-point trip since August really follows up. Really no help of a 1% up day, anything like that. So it just grinds. And the market's been kind of gathering strength from the segments that are working, like healthcare, like you said today, industrials and others. And the laggards are not offsetting that just yet. So I think it's very much in character of the way this market's been behaving.
Sarah?
I would have to agree. I mean, you look at all the things that have happened and you look at what we've been expecting, and it's still, we don't have any of it, and yet the market is happy to go higher with it anyway. I think the backdrop of earnings being better, global growth being a little bit better, and low rates are really helping. So I think if we can get through another earnings season without any big shocks and no other problems, I think we still can move to the upside.
Jeff, I know you're so excited about Dow 23,000. You just can't hold it together. I mean, what does a level like that say to you, or the pace of the move since 22,000, if anything?
Yeah, the pace would be more interesting to me than the level. Look, I'm in the camp that this is a liquidity-driven market. That continues to be the case despite the Fed raising rates. That's prompting this low volatility. The market's in good shape as long as that continues. I mean, that's late innings, but as long as that continues, we're in good shape.
So if we add 50 more trading days on to 24,000, 50 more trading days is 25,000, just to extrapolate, not project here, obviously, but we're talking about less than 6 months, Michael, till we're talking about Dow 25,000. We bottomed at around, what was it, 7,000 during the financial crisis?
Yeah, that's about right. And the Dow has been the outperformer in the last year or so. I think that's kind of maybe a quirk, but also some significance in terms of the mix of stocks. Global, very large, cyclical for the most part, industrial. I think if you look at the leadership since the last threshold of 1,000 points, it's modestly encouraging. It's that liquidity-driven move that Jeff talks about, but it's favoring global cyclical, things that say good things about the economy as opposed to defensive stocks.
Let's drill down on a couple of those Dow components that reported earnings this morning. They include United Health and Johnson & Johnson, and both of them were trading higher. Johnson & Johnson, it was a double beat. It was a raise. That's up 3.5% on the bell. United Health up 5.5%. And other healthcare stocks were also higher after reports this afternoon that U.S. senators have reached a bipartisan deal to stabilize Obamacare. Where does that leave you, Sarah?
Well, I think that was something that was obviously healthcare has been very volatile this year. Unlike a lot of the market, which has not been volatile as a whole, healthcare has been on the back of all of these different things that were going to happen or not happen. I think a stabilization helps, and I think it puts things in perspective for the next couple of years where they can try to fix this legislatively, which I think was the original argument. So we'll see where that goes, but at least you don't have the floor coming out from underneath it.
Jeff, I mean, same thing. We watched the healthcare sector as a whole just kind of move higher today, even when the president on the one hand seemed to be saying that the move was overdone. The announcement that these negotiations have yielded some fruit in the Senate seems to have helped that move.
There are a lot of really good charts in healthcare, despite what Mike's talking about with cyclicality, and I would totally agree. Healthcare is quietly strong, what you consider more of a defensive sector or a really, hot sector like biotech, but the charts in biotech, or I'm sorry, the charts in healthcare generally really are big bases that are coming up, and not a lot of people are interested in them. So they actually are. We think it's one of the best sectors for 18.
Michael, I mean, I think an easy narrative, a lazy narrative would have been anything that comes out of this administration is going to take dollars out of the system, therefore avoid the healthcare sector. Right. And the complete opposite has been true in terms of the performance.
Right. No, I think that the market's preference in some parts of this year for growth has rotated. It's sort of stolen a little bit of that from tech. Certain parts of healthcare that look more like tech have done well. It's also global. It's also a very simple demographic story that people tend to be able to glom onto if you don't have, policy risks that are going to interrupt that story.
Right. Well, we'll see where that goes in terms of those Senate plans for those payments. Anyway, that a lot of these health insurers are counting on. Also, new reports today that President Trump will likely choose the next Federal Reserve chair by early November. The 5 candidates for the position, according to the Journal, are Janet Yellen, Gary Cohn, Kevin Warsh, Jerome Powell, and John Taylor. Yesterday, Fed chair candidate Gary Cohn also said Congress could exclude big U.S. banks from some Dodd-Frank rules by the end of 2017. And it follows earnings this morning for Morgan Stanley and Goldman Sachs. Morgan Stanley trading higher today, about 0.5%, but Goldman, guys, moving lower by 2.5%. So there's a lot of different winds here, kind of blowing the financials around. How important is the Fed chair selection when we look at those 5 candidates?
Well, I think the question is, are they going to change policy to what looks like it should be a tightening policy? But we'll see, because I absolutely agree with Jeff that there's a lot of liquidity driving this market, both from the U.S. and outside the U.S. So I think it is going to be important in terms of what people think they're going to do with rates, but ultimately it comes down with what they actually do and what they actually do with the balance sheet. And I think that if the economic growth can pick up where central bank liquidity can hand off, right, I think that's the biggest question for markets going forward.
Do you agree, Jeff, with what Steve Grasso has been saying, that, regardless of what you may think about a more hawkish candidate moving up these interest rates, that the market is telling you right now from movements in rates and the dollar and so forth that it's not going up, that we're talking about low for a lot longer?
I think you're talking lower than what people would otherwise expect, but I do think they're going up. And I think they'll go up gradually, but I think the last I looked, the market has 4 rate hikes between now and the end of next year. That looks about right. Remember, the PMIs are running very, very hot. Employment's running very, very hot. Inflation's not. A big part of that is because of oil. So there's some risk in our view that you can actually have more of an asset bubble, which is why valuation doesn't matter, because the Fed is lower longer, because they're focused on inflation, but it's going into financial assets.
In the meantime, and we've seen them talk a little bit about that. So where do the results from Morgan and Goldman today fall, which seem to point to Morgan's wealth management model is firing on all cylinders, and Goldman's kind of thick trading revenue reliance is still a problem?
Right. The part of Morgan Stanley's business that looks like Goldman Sachs is a much smaller piece, and therefore the market is not that concerned with Morgan Stanley. I would say the banks as a whole, though, they did not hold a bid today, and I think it's because of what the bond market did. If you get 3 more rate hikes and the 10-year yield doesn't move at all,
right,
then you're talking basically about a flat yield curve. Until you get flat, I don't think it's a big concern, but that's the direction you're moving, and I think it weighs on sentiment toward the banks right now. When it comes to Goldman, it had a little bit of a bounce. I still think people are concerned that it's been disrupted in the trading business somehow.
Yeah, no, it's fascinating to think about. We're starting to look back to the financial crisis. It really has taken a lot of wind out of their sails. Let's check quickly on the Mexican peso, which was slightly higher today after Mexico and Canada rejected proposals made by the U.S. during the current fourth round, really, of NAFTA renegotiations. Those 3 countries said they will extend negotiation talks into early next year. The peso up about 9% this year, guys. But, Jeff, when you're looking at the peso chart and these negotiations, I don't know. I mean, it feels like a whole lot of hand-waving without a lot of change right now. But there's a lot at stake, so it's hard to kind of to look at the implications. I
mean, it's like a game of poker where all red cards are wild, right? It's sort of like, what am I supposed to do with this? So, as we look at it, it's an uptrend. It's an oversold condition, an uptrend. At the margin, we'd be buyers of that condition. That's generally what you want to do. So, I think one thing that Trump has shown is he takes a position that's extreme and seems to work his way back to something that would be extreme if you started with that, but doesn't look as extreme as what you end up with. So, I think that's what this ends up being. I mean, that's not my area of expertise. But if I look at the oversold condition continuation in the uptrend, I think it's viable.
All right. Meantime, Politico reporting that Rand Paul could be a major thorn in the side of the Republican budget plan. Remember, that has to come before taxes. The Kentucky Republican reportedly is prepared to vote no on the GOP budget if billions of dollars are not cut from the plan. Voting is slated to begin Thursday, and passage is essential for any hopes of tax reform. Sarah, I mean, is that a hurdle for you for this market, going back to the fact that we're continuing to close at these new highs and new levels?
I think that in the beginning of the year, the expectation was if you didn't get tax reform done, the market was going to have a problem. Now it just continues to be something that we're looking forward to, but that we're looking forward to in a positive way. I'm not sure that the market is going to see a problem if they don't get it done and if it moves into next year, because there has been some talk about that already. I think they'd like to get it done, but I think the market can still look at the anticipation for that and still use that as a reason to be happier going forward.
And by the way, Michael, a late development is actually that Senator Thad Cochran of Mississippi has returned to Washington. Of course, he was in very poor health, recovering from some medical issues, and they're trying to get every person who might support the budget and the tax reform.
That changes the nose count, basically, on potential votes for the budget resolution, right? So if before it was, you really couldn't lose more than one or two, so maybe that helps out a little bit. I've been saying all along, the moment it really matters, the whole tax reform thing to the market, is the moment when 2018 earnings estimates seem dependent on getting a corporate tax cut. I'm not sure we're there.
Because I know they're high.
I think the stated numbers probably got some of that baked into it, but I don't think the market's going to focus on exactly how that plays into earnings forecasts until that moment.
Do your estimates, Sarah, account for that? Do they jump higher when you start looking at, what are your favorite companies right here?
So we like defense here. We think that energy's finally gotten some relief from higher oil prices. I think there's some good places here. But I think that building in all those tax reforms is going to be a tough thing, and it's going to depend on where analysts are in their estimates to see where that goes. I'm not baking in too much now because I don't want to have to worry about
Let me just squeeze in this news on Netflix today before we get to IBM results, which are crossing right now. But, Jeff, Netflix actually crossed lower after hitting an all-time high earlier in the session. We reported it was higher after those earnings yesterday. They managed to beat, at least on the revenue number. Netflix was also the most searched ticker today on CNBC.com. And analysts were largely positive about the quarter. At least 5 different firms raised their targets. Goldman Sachs noted the projection for many years of continued cash burn does raise the risk profile of the stock. The company says it'll spend as much as $8 billion on content next year. Dropped 1.5% on the close, Jeff.
I think this is exactly what you have to be careful of. These are glam stocks. They're very much in focus, and when they can't respond to good news, you absolutely have to take that for what it's worth. And I think this is a saturated stock. I think it's going to, in fact, of the FANGs, I think it's the best performer since the end of the first half. I'd be careful with this one.
Let's move from new tech to old here. Well, I shouldn't even put it that way. I know. Let's let Josh Lipton talk about it. Josh, those IBM numbers are out. How did they do?
Kelly, IBM reporting EPS of $3.30. That's versus expectations of $3.28. Revenue, $19.15 billion, Kelly. That's versus expectations of $18.6 billion, though that does mean 22 straight quarters of revenue decline year over year, Kelly. Gross margins clock in at 47.6%. Strategic imperatives, so AI, analytics, cybersecurity, cloud, $8.8 billion. That's up 11% as reported. Cloud revenue in the quarter, $4.1 billion. That's up 20%. Cognitive solutions, so that includes Watson, $4.4 billion. Global business services, $4.1 billion. And technology services and cloud platforms, that's $8.5 billion, down 3% as reported. Looking ahead, IBM maintaining its full-year guidance of at least $13.80. Kelly, back to you.
All right, thank you very much, Josh. The shares moving up about 2.5%. Michael, what do you think?
Maintaining guidance both for cash flow and for earnings per share, I think, is basically going to take a little bit of the drama out of here. Also, the stock, I will say, you can't necessarily depend on the first reflex in terms of how the stock reacts to earnings. I think with IBM in particular, you sometimes have people digging through the numbers, figuring out what the tax rate was and all the other kind of footnotes. But look, I think it's probably as expected in a stock that's in a downtrend, and it's not really giving you much to get excited about.
Sarah?
I would agree with that. I mean, I think that you've got a nice dividend yield there. It's not expensive, but you've got a constant decline that they're fighting, and it doesn't look like they found anything to turn it around. So until you see an inflection in revenues, I think it's a place that people are collecting a dividend.
And Jeff, it was mentioned earlier by our bear on the company that their strategic imperatives, which is all kind of new growthy stuff, was only up 7% last quarter. This quarter, it's up 11%, and they say cloud now accounts for 20% of the company's total revenue. That's a doubling from 4 years ago. Is that enough?
It's a show-me stock still. There's a lot of resistance at 150. I doubt it is. It's still in a downtrend, as Mike points out. It's a show-me stock. So overbought conditions in downtrends, that's where we are. Seller.
But we have seen companies reposition themselves, the old tech company. I'm thinking a little bit of Oracle lately, kind of been able to join more of this new tech momentum kind of play. So can IBM get there? I mean, is it just a matter of time, or is this like an existential?
It's going to require more. Oracle's in an uptrend. Intel's breaking out. Cisco's breaking out. They look nothing like IBM, which is still down and to the right.
Sarah, are you guys an owner of those other names?
We own Microsoft, and we own Cisco, but we don't own IBM.
What were you going to say, Michael?
Well, I was going to say, at some point, when you get to some threshold, when people actually believe that those new strategic initiatives are generally new businesses as you're defining them, and they get to a certain critical point as a percentage of sales and revenue, sales and earnings, yes, then maybe the stock can get revalued. But I'm not sure that that the market sees that just yet.
Yeah, and the other thing to mention, if they do a big emphasis on artificial intelligence, of course, and they're just saying they're putting more AI or Watson into the cloud, trying to differentiate from offerings from Microsoft and Amazon and some of the others. The analytics business growing, I think they mean 5% year over year. But again, Sarah, you prefer a Microsoft here. Is there any reason why IBM would kind of elbow its way into your portfolio?
I think that this goes back to
others. The analytics business growing, I think they mean 5% year over year. But again, Sarah, you prefer a Microsoft here. Is there any reason why IBM would kind of elbow its way into your portfolio?
I think that this goes back to the point that you were making. Until you see an inflection, until it really changes, and it changes enough, it's really hard to look at declining earnings quarter over quarter over quarter and be excited about the new parts if they're not growing fast enough to take care of the parts that are still shrinking. So I think you really need to see an inflection before people get comfortable with stocks like that, and then they can become that story of the new things. But I don't think that there is enough of that yet for them.
All right, and there's IBM moving higher, about 1.5%, coming a little bit off the initial move there after reporting their earnings. Guys, thank you very much for joining us today. Good to see you. Sarah Hunt and Jeff DeGraff. The Dow briefly did cross the 23,000 level this morning for the first time, and it closed within just 3 points of that. Up next, we've got someone who says the run is far from over, and he'll tell you where he sees opportunity. That's right after this. Later, Chip and Joanna Gaines, hosts of the hit home renovation show Fixer Upper, give us their thoughts on the real estate industry and why they have chosen to end their hit show. We got to ask them about that. And we always want to hear from you. Share your thoughts with us via Twitter, Facebook, or over email. Send in any questions for Chip and Joe. You're watching CNBC, first in business worldwide.